What really stands out to you about Stupid Bitcoin's approach?
You know, it's the combination of technical analysis with that psychological self-awareness that's really interesting to me.
Magic and technology, voodoo dolls, chance and electricity. We're making weird science. Ooh. Fantasy and microchips, building from the script, something different. We're making weird science. Ooh. From the heart and from the hand, why don't people understand? Weird food, weird science. Weird science. Ooh.
Right. Hey, everyone. Welcome back. Today, we're going deep into a trading philosophy that's really got me scratching my head in a good way, of course. It's called Rubik's Algo, and it's the brainchild of someone who calls themselves Stupid Bitcoin.
Yeah.
I mean, right off the bat, the name itself, you got to admit, it's kind of catchy.
Yeah, and what makes this deep dive so interesting is the sources. We've got this fascinating, almost like personality deep dive using the Enneagram, and then gets super technical talking about all this custom code for trading indicators. It's like know thyself meets like high-frequency trading algorithms.
Yeah, so it really does feel like we're about to unlock some kind of secret code here.
Right.
Our mission, if you choose to accept it, is to figure out how stupid Bitcoin connects these worlds, right?
Sure.
Personality and algorithms. And to help you understand the core concepts behind this whole Rubik's Algo thing. No coding degree needed.
Absolutely.
No Wall Street experience necessary. So before we get lost in the code, let's talk about the creator. Who is Stupid Bitcoin?
So from what we can piece together, it seems like they've got a background in AI engineering, trading, game development even. They mentioned something about being Six Sigma, which adds a whole other layer of mystery, right?
Yeah, for sure. I mean, game development, AI, and trading. That's not your typical resume?
No, not at all.
Okay, before we go any further, we got to address the elephant in the room. Or should I say the stupid disclaimers?
Oh, yeah, they're definitely eye-catching.
So disclaimer number one, very standard stuff. This is not financial advice.
Right, just exploring ideas here.
Disclaimer number two, the code is all open source and AI assisted, meaning anyone can use it. Even theoretically, your Roomba could use this to trade, which is a thought.
Yeah, robot butlers managing our portfolios.
Now, disclaimer number three, this is where things get a little spicy. Stupid Bitcoin is basically calling out some folks in the coding and education world for being, well, a little stuck in their ways.
It's fascinating. They're saying that there's this resistance to change, this clinging to outdated methods, even some people who are offended by the idea of AI being able to like improve on human code.
Yeah, some bruised egos out there maybe.
Seems like it.
But you got to admire Stupid Bitcoin for not backing down. They're putting the code out there for anyone to use, which I guess fits their whole persona.
It does. It's a bold move.
Okay, are you ready for the Rubik's Cube part of all this?
I am. Lay it on me.
So, Stupid Bitcoin compares market makers to these like speed cubers solving Rubik's Cubes. They even talk about people solving them while juggling, which is insane.
Yeah, the idea being that both are masters of sequencing and execution, right?
Right.
But then they take it a step further and they introduce this concept of a Rubik's Cube where the colors of the squares are constantly changing.
Whoa.
So it's not just about solving a static puzzle, it's about solving a puzzle that's in constant flux, which is a brilliant metaphor for market liquidity.
And here's the kicker. You don't actually need to be a speed cuber or a market maker to profit. That's where Rubik's Algo comes in.
Right. It simplifies the complexity.
Okay, now for the part I'm really excited about, the Enneagram. This is where Stupid Bitcoin really gets unique, using this personality typing system to understand how different types might approach trading. And just to bring this to life a little bit, Stupid Bitcoin links these Enneagram types to Myers-Briggs. So we're talking about INFJs or ISTJs here.
Clever way to connect with the listener.
Yeah, you might recognize yourself in there.
Yeah, recognizing that our inherent personality traits can influence how we interact with the markets.
For better or worse. So, are you ready to break down all 9 types and see how they might play out in the trading arena?
Let's do it.
Okay, let's start with type 1, the reformer. These are the folks who crave structure, logic, order.
In trading, that can be a huge asset. They're naturally inclined to create plans, stick to strategies, really think about risk management.
So they'd be great at building a solid system, but could that love of structure also backfire in a fast-paced market?
That's the thing. They could get bogged down in the details, overanalyze, and miss opportunities because they're too hesitant to actually, pull the trigger.
So flexibility is not their strong suit. So for all you Type 1 traders out there, Stupid Bitcoin has some advice. For newbies, be a flexible robot, not just a robot.
Love it.
Novices, structure is great, but don't let it become a prison. Stay open to new info.
Good advice.
And for the masters, use those analytical skills for robust risk management, but don't get lost in analysis paralysis. Sometimes you gotta act.
Definitely.
All right, Type 2, the helper. These are the folks who, get energy from supporting others.
Yeah, they're all about building relationships.
So how does that translate to the trading world, which, let's face it, can be pretty cutthroat?
It can be tricky. They need to watch out for letting their desire to help cloud their judgment, or maybe overestimating their ability to influence other traders.
So boundaries are important. And in terms of Myers-Briggs, we're often looking at ISFJs here. Feeling and intuition leading the way.
Makes sense.
Okay, Type 2 traders, Stupid Bitcoin has some words for you. Newbies. It's okay to not be everyone's hero.
Sometimes the best way to help is to focus on your own growth.
Novices. Channel your empathy into understanding the market, not into rescuing other traders. You can't control their outcomes.
Right.
And masters. Your sensitivity to market sentiment can be an asset, but don't let it derail your objectivity. Stay focused on your own goals. Okay, on to Type 3, the achiever. I have a feeling a lot of us will relate to this one.
Yeah, these are the folks who love to compete. They love pushing themselves to be the best.
Sounds like they'd be right at home in the trading world, right?
Yeah, absolutely. That drive and ambition can be a huge advantage. But they also need to watch out for their need for validation. It can lead them to take unnecessary risks, chase those wins just to keep up appearances.
The classic ego trap. And their Myers-Briggs counterparts, often ENFJs and ENFPs, definitely fit that mold. Charismatic, competitive, often drawn to leadership roles.
Makes sense.
So Type 3 traders, listen up. For the beginners, it's not a race, it's a marathon.
Patience, long-term perspective.
Novices, make sure you're working for your own growth, not for the approval of others. Define your own version of success.
Yeah, define your own path.
And masters, detach from the need to constantly prove yourself. Focus on refining your system, mastering your craft, and remember that losses are part of the game.
Losses are less.
Okay, now for a type that I wouldn't immediately think of as a trader. Type 4, the individualist. These are the creative, emotional types, drawn to the artistic, the unique.
Right, and that can actually clash with the demands of the market. They might see trading as an art form relying on intuition and feeling, which can lead to some emotional decisions.
So their natural inclinations can actually work against them, especially if we look at their Myers-Briggs types, ENFPs and INFPs. They're all about self-expression, exploring their inner world. It's a different kind of exploration than the market demands.
For sure.
So, for the Type 4 traders out there, Stupid Bitcoin keeps it simple. Beginners. Don't trade with your feelings, trade with your head.
Good advice.
Novices. Balance your creative perspective with structure and discipline. Embrace the analytical side of trading.
Find that balance.
And masters. Use your unique perspective to inform your strategies, but always within a framework of structure, risk management, and emotional control.
Don't let those feelings run wild.
Okay, on to Type 5, the investigator. Now, these folks, they seem like they'd be naturals in the trading world.
You'd think so, right. They're data-driven, analytical, they love diving deep into complex topics.
Which trading is all about, right?
Yeah.
But could their thirst for knowledge actually be a hindrance?
That's the paradox of the Type 5. Their biggest strength, that love of information, can also be their downfall. They can get so caught up in research and analysis that they struggle to make decisions.
Paralysis by analysis.
Exactly.
And we see this mirrored in their Myers-Briggs counterparts, the INTPs and the INTJs.
Those rational, knowledge-seeking minds.
So, Type 5 traders, here's the wisdom from Stupid Bitcoin. For you newbies out there, stop thinking.
Dive in.
Novices. Remember, trading is more than just gathering information. You got to put that knowledge to work in the market.
Just those theories.
And masters, your analytical skills are a superpower, but don't let them hold you back from taking calculated risks. Combine your analysis with decisive action.
Action is key.
Okay, Type 6, the loyalist. They strike me as the type who would approach everything with a well-thought-out plan.
They do. They value security, predictability. They're all about planning for every possible scenario.
But in the market, risk is inevitable. How do they deal with that?
That's the challenge. Their need for certainty might make it difficult for them to, accept the inherent uncertainty of the market.
So they need to get comfortable with the unknown.
Yeah.
And their Myers-Briggs types, ISTPs and ENTPs, reflect that tension too.
Seeking protection or challenging conventions.
So for our Type 6 traders, stupid Bitcoin is a bold message. Beginners. Risk is your friend, not your enemy.
Embrace the risk.
Novices. Don't let your desire for security paralyze you. Sometimes the best opportunities are outside your comfort zone.
That's right.
And masters. Use your planning skills for robust risk management, but don't let fear of failure hold you back.
Trust your plan.
Okay, Type 7, the enthusiast. Now, these folks seem like they'd thrive in the fast-paced, always changing world of trading.
They do love possibilities, new experiences, and they can adapt quickly, which is a huge advantage in the market.
So spotting new opportunities, riding those waves of market trends, that probably comes naturally to them.
Oh, yeah. But their biggest challenge is discipline. They need to learn to harness that energy, channel it into focused action.
Otherwise, they might jump from one shiny object to the next. And we see this reflected in their Myers-Briggs types as well, ESFPs and ESTPs. Curious, outgoing, but easily distracted.
It's a double-edged sword.
So, Type 7 traders, remember this. Newbies. Focus is the new excitement.
I love that.
Novices. Manage your need for novelty and focus on mastering the task at hand. Don't let your enthusiasm lead you astray.
Good advice.
And masters. Use your adaptability to fine-tune your strategies, but don't let that need for stimulation interfere with your plans. Find that sweet spot between exploring and sticking to your guns.
That's all about balance.
All right, Type 8, the challenger. They sound like they're ready to take charge of the market.
They definitely bring that intensity. Assertive, confident, decisive action is their thing.
Which can be great in trading, but could that need for control backfire?
Absolutely. They might overtrade, take unnecessary risks, or struggle to actually trust their system.
Letting go of that control is tough. And their Myers-Briggs types, ENTJs and ESTJs, also point to that dominant take-charge personality.
They're natural leaders.
So, Type 8 traders, here's the message for you. Beginners, control the chaos, don't become it.
Stay grounded.
Novices. Remember, trading is about patience and self-awareness. You can't force the market to do what you want.
Let the market guide you.
And masters. Channel your leadership skills into creating a robust trading system and sticking to your plan. Learn to delegate, become more aware of your emotions, and remember that sometimes the most powerful move is knowing when to step back.
Wise words.
And finally, Type 9, the peacemaker. Now this one really intrigues me. How does a type that seeks harmony and avoids conflict navigate the often turbulent world of trading?
It's a paradox. Their inclination is to smooth things over, seek consensus, create peace, but the market doesn't care about your need for peace.
So they might hesitate when they need to act, overthink your decisions, miss opportunities because they're trying to avoid conflict.
Yeah, it's a real challenge for them.
And we see this reflected in their Myers-Briggs types as well. INFPs and ISFPs, patient, warm, empathetic, valuing harmony above all else.
It's a tough environment for them.
So, Type 9 traders, listen up. Nudies, your decisions matter.
You have the power.
Novices, learn to stand up for your own needs, make decisions that align with your goals, and be willing to act even when it feels uncomfortable.
Don't be afraid to take action.
And masters, use your ability to see different perspectives to inform your decisions, but don't let it paralyze you. Prioritize your own trading needs. Overcome that inertia.
Take charge of your trading journey.
Okay, so we've met stupid Bitcoin. We've explored this fascinating Enneagram approach to trading. We've even tackled the Rubik's Cube analogy. But what about the actual Rubik's Algo itself?
Weird science. Ooh. Bits and pieces. Not what teachers said to do. Living tissue, making dreams come true. Weird science. Ooh. Bits and pieces. Ooh, my creation.
What are we dealing with here?
So from what I can gather, there are two main indicators, the Lickety heat map and the market cipher EZ.
Okay, so let's start with the Lickety heat map. Paint me a picture. What am I looking at here?
So imagine a heat map, like a weather map, but instead of showing temperature, it's showing areas where traders might be forced to close their positions because of, how the market moves. The hotter the color, the stronger the signal.
Okay, that's starting to make sense. And the cool thing is, you can customize the heat map to fit your risk tolerance and trading style.
Exactly. Tailor it to your needs.
Okay, so let's move on to the market cipher EZ. What's the deal with this one?
This one is a bit more complex. Think of it as like a multi-tool for technical analysis. It combines a bunch of indicators, even a little bit of machine learning, to help you interpret the market's signals.
Machine learning. Okay, now we're talking. So break it down for me. What are the key parts of this market cipher?
So first, you've got stochastic money flow. This is like a speedometer for price trends. It helps you see how strong a move is and whether it's likely to continue.
Okay.
Then there are vector recovery zones, which are designed to spot potential reversal areas, like where the market might bounce back after a big move.
Gotcha.
Then you've got these things called bounce boxes, which help you identify overbought and oversold conditions, like when the price hits the top or bottom of the box, it might be a sign of a reversal.
Okay.
And then to top it all off, there are these dynamically adjusting fast and slow Rubik lines. These lines help you identify trends, like whether the market is trending up, down, or just chopping around.
Wow, okay, that's a lot to take in.
Yeah.
It sounds like this market cipher EZ is giving me a whole 360-degree view of the market.
That's the goal.
Okay, before we get into the nitty-gritty of how to actually use these indicators, what else should we know about stupid Bitcoin's trading philosophy?
Well, there are a few really interesting things they say, like it is not an indicator that gives you profit, it is the market.
Oh, I like that. So it's not about blindly following signals. It's about understanding the bigger picture.
Right. They also say restricted traders are profitable traders.
Now, what do they mean by restricted in this context?
It seems to be about discipline, having a plan, setting rules for yourself, and not just, chasing every trade.
Right, picking your battles.
And finally, they say the default indicator settings are adapted to merge and mirror trade philosophies.
So they're not just making these settings up. They're based on proven methods.
That's the impression I get.
Okay, so we've got a pretty good foundation now. We've met stupid Bitcoin, explored the Enneagram, and even gotten a taste of the indicators themselves.
It's been a journey.
Magic and technology, voodoo dolls, chance, weird science. Behind bolted doors, things I've never seen before. Weird science, not what teachers said to do. Ooh, bits and pieces. Weird science. Ooh, bits and pieces. Not what teachers said to do. Living tissue, making dreams come true. Weird science. Ooh.
So now let's shift gears and dive into the practical side of things.
Let's see how these tools actually work in real trading scenarios.
All right, welcome back. I'm ready to see these Rubik's Algo indicators in action. How about you?
Definitely. Let's see how this stuff works in the real world.
Okay, so let's start with the Liquidity heat map. If I'm a trader, how am I actually using this thing to make decisions?
So imagine you're looking at a Bitcoin chart. You're thinking about going long. You pull up the Lickety heat map and you see a bunch of bright red alpha levels just below the current price.
Okay, and that's telling me what exactly?
It's basically saying, hey, be careful. There's a lot of leverage here. If the price drops below that level, all those leveraged longs could get liquidated, which would push the price down even more.
Ah, so it's not a buy or sell signal, but it's giving you context, like a heads up about the risk.
Exactly. It's like having X-ray vision into the market. You can see where those hidden pressure points are.
I like it. Now, what about those omega levels? How do those fit in?
Let's say you see a bright orange omega level forming just above the current price, and there's a surge in buying volume. That could be a sign that a big player is loading up, which might push the price higher.
So the alpha levels are more about risk management, and the omega levels are more about spotting potential strength.
You got it.
Okay, now let's talk about the market cipher EZ. This one seems like it's got a lot going on. How can a trader actually use this to their advantage?
So remember how we talked about it combining technical analysis with machine learning?
Yeah.
Let's break it down.
Okay, so that stochastic money flow indicator, you said it's like a speedometer for price. What exactly does that mean?
It basically measures how strong the price movements are. High reading, strong momentum, the trend is likely to continue. Low reading, momentum is fading, might be a reversal coming.
So it's not just about the direction, it's about the force behind the move.
Exactly. The market cipher EZ shows this as a line going from 0 to 100. Above 80, overbought, below 20, oversold.
Okay, so I can use those readings to see if the trend is likely to keep going or if it might reverse.
Right, anticipate those turning points.
Now, what about those vector recovery zones? Those are supposed to help me spot reversals, right?
Remember the market being like a pinball machine bouncing between those bounce boxes?
Yeah, I'm picturing it.
Well, the vector recovery zones are like those bumpers, but they're dynamic, they're always adjusting.
So they're like these little support and resistance zones that are constantly shifting.
Exactly. When the price enters one of these zones, it could mean the market's running out of steam and a reversal might be coming.
So if I'm in a trade and the price hits one of those zones, that might be a good time to take some profits or tighten up my stop loss.
Definitely. Manage that risk.
Okay, and now for the main event, the bounce boxes themselves. How did those actually work?
So these boxes are all about identifying those extreme overbought and oversold conditions. It's where the market is likely to, well, bounce. Think of them like support and resistance levels, but visualized.
So when the price hits the top of the box, it might be overextended and due for a pullback.
Right, and when it hits the bottom, it might be oversold and ready to bounce back up.
Okay, that makes sense. But how are these different from the vector recovery zones? They both seem to be about reversals.
Good question. Think of the vector recovery zones as early warning signs, like, hey, the market might be losing steam. The bounce boxes are more like, okay, this is it, extreme overbought or oversold. Reversal is very likely.
So the zones are like the yellow traffic lights and the boxes are like the red lights.
Exactly.
Okay, and finally, those fast and slow Rubik lines. You said these are all about identifying trends, right?
Yeah, think of them like moving averages, but they're smarter. They adapt to the market's volatility, so they don't give you as many false signals.
So they're like moving averages that are constantly adjusting to the market's rhythm.
Exactly. The fast line reacts quickly, short-term view. The slow line is smoother, longer-term view.
So if the fast line crosses above the slow line, that's a buy signal, new uptrend.
Right. And if it crosses below, that's a sell signal, downtrend.
But there's more to it than just those crossovers, right?
Of course. You can also look at the slope of the lines, the distance between them, how they relate to the price action to get even more information.
So if the lines are sloping up and the price is above them, strong uptrend. If they're sloping down and the price is below them, strong downtrend. Okay, wow, we've covered a lot here. The heat map, the market cipher EZ, even those stupid disclaimers. What really stands out to you about stupid Bitcoin's approach?
You know, it's the combination of technical analysis with that psychological self-awareness that's really interesting to me.
Yeah, it's not just about the charts. It's about understanding yourself and how you react to the market.
Exactly.
So before we wrap up, let's think about how our listeners can apply all this to their own trading.
Good idea.
What are some key takeaways?
Well, first off, that whole Enneagram thing, that's powerful stuff. Knowing your type can help you see your strengths and weaknesses as a trader. Are you prone to overthinking? Do you chase every trade? Knowing that can help you develop strategies, you know?
It's like a roadmap, personalized for you. And then there are the tools themselves. That Lichty heat map, it's like having X-ray vision.
It is.
And the market cipher ease with all those indicators and the machine learning, it's giving you such a comprehensive view of the market.
It's like having a whole team of analysts working for you.
And you can customize them, make them work for your style. So before we go, what's that final thought you want to leave our listeners with?
I think the big question is, can understanding your personality and using the right tools actually make you a more successful trader?
Good question. What do you think?
I think the answer is yes. It's not a guarantee, of course.
Yeah.
But it gives you an edge. Combine self-awareness, the right tools, and a solid understanding of the market, and you're in a much better position.
So to all our listeners out there, embrace that self-discovery, experiment with these tools, and see what happens.
And remember, trading is a journey. It's all about learning, adapting, evolving.
Stay curious, stay disciplined, and never stop learning. Until next time, happy trading. Okay, so that wraps up our deep dive into Rubik's Algo. I don't know about you, but I'm feeling like I just took a crash course in like trading psychology and advanced technical analysis all at once.
Yeah, it's been a whirlwind.
We've met the mastermind behind it all, stupid Bitcoin. And let's be honest, the name alone is enough to pique your curiosity. We've explored this whole Enneagram approach to trading, which I gotta say is pretty mind-blowing.
Definitely a different way of looking at things.
And we've even learned how to spot those hidden leverage bombs with the Lipke heat map, which, let's face it, is a pretty cool trick.
It's like having a secret weapon.
And those stupid disclaimers, you gotta love the humor there.
Oh yeah, definitely adds a bit of personality.
But beyond all the bells and whistles, what really strikes me about Stupid Bitcoin's approach is the emphasis on self-awareness.
Yeah, it's not just about the charts and the indicators, it's about knowing yourself.
Right, knowing your strengths, your weaknesses, and how those might influence your trading decisions.
It's about bringing your whole self to the game.
So before we sign off, what are some key takeaways you want to leave our listeners with?
Well, first and foremost, don't underestimate the power of knowing yourself. Take some time to really explore your Enneagram type. Figure out what makes you tick as a trader. Are you impulsive? Are you a perfectionist? Knowing these things can help you develop a trading style that works for you, not against you.
It's about playing to your strengths,
Yeah,
right?
exactly.
And remember, the tools are just tools.
Yeah, they can't replace good old-fashioned market knowledge and risk management.
The Lipke heat map, the Market Cipher EZ, they can give you an edge, but they're not going to magically make you a profitable trader.
You still need to understand how to use them, how to interpret the signals, how to manage your risk.
So don't get caught up in the hype. Focus on the fundamentals.
Yeah.
And finally, don't be afraid to experiment, right?
Absolutely. There's no one right way to trade. Try different things, see what works for you, find your own style.
So to all our listeners out there, keep learning, keep exploring, and never stop challenging yourself.
The market is always changing, and so should you.
And remember, the most important thing is to find a way to trade that you enjoy, that aligns with your goals and your personality.
If you're not having fun, what's the point?
Exactly. So until next time, happy trading, everyone.
Rubik's Algo didn't just code. They sculpted market insights with a year-long quest for perfection.
Imagine a mad scientist, but instead of monsters, they made market predicting tools.
They sifted through thousands of indicators and the code like panning for gold, refining and testing until the best signal remained.
Use this code, and you get a year of sleepless nights distilled into a few lines of brilliance.
Rubik's Algo didn't just build an indicator. They crafted a trading system using the science of Six Sigma.
It's a symphony of data as a language of color, helping traders reduce risk and improve trade decisions.
Forget outdated charts. Rubik's Algo cracked the market using the Rubik's Cube's 43 quintillion possible combinations.
The Rubik's Cube is used as a dynamic model for understanding market permutations.
Just as speedcubers use algorithms to solve the cube, market makers use algorithms to sequence order flow.
Why are you using yesterday's indicators for today's trades?
Rubik's Algo, it's more than meets the eye.